Hi folks, welcome to another episode of Investment Income for Life. This week has been a good week with the stock market rallying after the disastrous plunge last week. Even though prices has shot up, there are still a lot of good buys out there if you keep an eye out for it. Today is a sharing session on Keppel DC REIT, known as KDC, which has just announced its first quarter results. KDC is now a faint shadow of its former glory amidst the high interest rate environment and the various default issues with two tenants. Its price has recovered to $1.72 per unit as at 24th April 2024. This is way better than the last week's stock market carnage, which left KDC on an all-time low. Saying that, at $1.72 per unit, this is still a whopping 25.2% plunge from its 52 weeks high of $2.30 per unit. If you look at the 5 years price chart for KDC, you will notice that KDC has been performing very well over the past 5 years. This is even so during the COVID period of 2020. You can see that it also hit $3 over. But sadly, its performance recently has not been good. The outlook for KDC remains mixed. There are some analysts who have set a target of $2.20 per unit for KDC, saying that the worst is over and that its current low pricing has already factored in all the bad news. On the other hand, some folks have expressed extreme pessimism over the future prospect of Keppel DC REIT. For example, its tenant at Guangdong DC has been in default for many months. So today I will be sharing more of my personal thoughts on whether we should take the opportunity of this dip to buy more into KDC, or we should simply just dump all units and move on to other investment with more upside potential. To answer this vital question, we need to first look at the latest major developments that has an impact on Keppel DC REIT before we dive into its financials. It is always the business that drives the number and not the other way around. So today we should look at 3 developments. Number 1, KDC Dispute with DXC Technology over the unpaid rental. 2, the Guangdong DC tenant default. And 3, KDC disposal of its Sydney data center to unlock Aussie $174 million. Okay, on the recent event 1, with regards to the DXC Technology saga, DXC has agreed to pay $9.85 million as a settlement to KDC in order to close the case. The background of this default arises because DXC Technology actually wanted to do an early reduction in its lease footprint at Keppel DC Singapore 1. DXC Technology believed that its contract with KDC has a clause that allows it to return excess space at any point in time. So, despite this settlement, right, this means that there are actually unoccupied spaces at this data center. In addition, note that this 9.85 million USD, okay, which is the equivalent of 13.3 million Sing dollar, is being spread over 4 quarters into the 2024 financial statements published by KDC. So what this means is that the 2024 numbers, right, is not normalized. It includes this upside that is relating to April 1st, 2021 to March 31st, 2025. with regard to the dispute over the space. So if we were to remove this non-recurring income for first quarter of 2024, okay, the year-on-year comparative against 2023 first quarter, right, will be a lot worse. The decline is no longer 16.3%, but rather a colossal drop of 22.3% relative to previous financial period. So clearly, the good news from this settlement agreement being reached between KDC and DXC Technology turns out not to be a good news after all. Do bear in mind that the upside from the settlement is just a temporary booster, but ultimately it is a non-recurring income. Next, let's take a look at the Guangdong DC tenant default, which is another major contributor of the horrendous result for KDC. As of December 15, 2023, KDC has released an announcement that it has issued a letter of demand to its tenant for 8.3 million yuan in unpaid rent and other expenses for the 3 Guangdong data center. Loss allowance have been provided for 2023, and same for the Q1 of 2024. KDC has also made an allowance for the rental payment. Okay, let me do a quick summary of the main points for the Guangdong DC tenant default. Number one, last payment from the tenant was in October 2023. This means that November remains in default. So from November 2023 till end of March 2024, which is the Q1 for KDC, this means that there were 5 months of unpaid rental up to Q1. The next question will be, what is the financial impact of this? As per the announcement, 4 months equivalent of unpaid rental equates to 8.5 million of rental areas. So this means that the annualized impact will be 25.5 million. The third highlight is that I find it strange that KDC management mentioned that they only serve the legal letter but will not be proceeding further with any other action, such as the writ of summon to court for remedy actions. And they are looking for a collaborative way to sort out the unpaid rental. It seems to indicate that the economic situation in China may be quite bad, that they could not find a replacement tenant fast, and so they have to live with the defaulter. Next, we talk about the development tree, which is Keppel DC REIT unlocks Aussie 174 million from the divestment of the Sydney data center at a 35.4% premium over valuation. This is actually a good initiative by the senior management of Keppel DC, which shows that they are actively managing the REIT itself for the benefit of all unit holders. Aussie $90 million, which is the bulk of the sales proceeds, will be reinvested into the Australia data center note issued by Macquarie Data Centers Group, and which pays an initial yield of 6.97%. That is around Aussie 6.3 million per annum. And they have also a built-in escalation clause that is linked to the CPI index. Another sum of Aussie 43 million of the sales proceeds will be used to pay down loans. This will reduce the aggregate leverage ratio from 37.6% to 36.7%. The remaining Aussie 22 million will be used for future M&A or working capital. So after all the various development, the million-dollar question will be, should we buy or sell KDC? The NTA of KDC is $1.33 per unit as at 31st March 2024. Market pricing is at around $1.72 per unit as at 25th April. So it is trading at close to 30% premium over the NTA. Then we have quarterly distribution for Q1 at 2.192 cents. So if you annualize this, you will get 8.768 cents per annum. That will translate to a 5.10% yield. Saying that, remember our earlier discussion with regards to the settlement from DXC Technology. So if we were to strip out this non-recurring income, the performance for Q1 is a lot worse. And if we normalize this, the actual distribution yield is at only 4.72%. So personally, for me, I do not find the current pricing that attractive. It's trading at a huge premium and it has a very low distribution yield of 4.72%. There are lots of alternative investment out there that give a way higher return than 4.72%. Like for example, we can go into bond funds, which actually pays out more than that currently, with less amount of risk taking. However, I will not be selling off any of my units in Keppel DC REIT. I will still be keeping them. Having data centers is essential for one's portfolio due to cloud computing and also the latest AI trend. Okay, folks, that's all for my sharing session today. Take care and good luck to you guys. Have a great week ahead. Bye.